Hey traders, Parker here with another indicator. Today I'll be introducing you to the average daily range high-low from open with standard deviations. The only other indicator I have on here is my VWAP. But what this indicator does, it takes the average range from the high from the open and the range from the open to the low, and it takes an average over a certain period of time. So if you go into the indicator, we can see I have it on a day time frame, have it only showing this time period. Excuse me. I have it having a length of 10, so this is the average of the 10 days. And I have it on show bubbles. Those are just the bubbles that are just showing there. And then you can move the bubbles from right or left by increasing or decreasing this. So what this indicator has, and it has your daily open or whatever time period you specify open, your range high, your range low for whatever the time period is, and the length of the time period. Your range mid, your range high standard deviation 1, range low standard deviation 1, range, these are deviations. You have an SMA, a simple movement average in there as well. You have your lowest low for that time period and specified time period. You have your highest high for that specified time period. And you have your midpoint. And that midpoint is right there for your highest high, lowest low time period. Right now the market's closed, so we're not going to see this thing actually in action. But if we go over for today's price action, well, let's show all the bubbles. So if I were to select here, chart scale, and go to fit studies, it's going to show the entire study. So the highest high, the lowest low, all the low standard deviations as well, but it's going to crunch up everything. So I'm going to remove that, go back to chart scale, and I'm going to click off of fit studies. So we can see today's price action with the S&P 500. You can see how it came to today's open. It pressed down into the midpoint for the range, for the average daily range, and it actually shot up from there. At the beginning of the day, it pushed up in here and kind of found some resistance here. That was kind of at their support as well for the average range high right here. And then you can see right here where it worked as resistance, came back to the open, came down here, found support somewhere in here on this at range mid, or it could be my 21.4 Fibonacci level as well on the daily. And also it's in this gap area. These pink lines represent a gap on the daily. So you can see how I actually offered as resistance and support as well. So I'm going to push it over multiple days so we can see how it acted on these other days as well. So now we can see how everything worked out for these multiple days or time periods. So yesterday will be Thursday. Once you're not going to see anything really until the market's actually open. So this is not going to be validated. So I can actually go in here and cut that off so we won't be looking at those time periods. And I'm going to take everything off, because it's going to cloud up everything. So the bubbles went away. That's all because the market's open. It's going to be another. Market's not open. It's going to be another day. But you can see how the SPY has responded to these different levels once they enter into those different levels. So this would be yesterday's price action. It found support here on the lower range, so the average daily range for the low. Found support, bounced up, and then it kind of pushed down from there. And you can see on these previous days how this indicator has worked out. And it can somewhat act as support and resistance at times, because this is your average daily range from high to open, open to low. So you can have this on multiple time frames. So right now I have on a daily. I'm going to shift this back to the way it was. So you can actually look at this to kind of sort of play out in some ways as support and resistance, and your average daily price movement, at least from the open. Yeah, at least from the open. So we're going to take it up to a higher time frame. We're going to go to the daily, and you can see how everything's messed up, or you really not getting a lot of information from it. So what I'm going to do is shift it up to a higher time frame. I'm going to put on a monthly. I'm going to shift this down to 3, and it should give some more information from there. So now we have more information. Well, let me take that VWAP off because it's not serving us any purpose just being there. This is what it looks like on a monthly. So I put on a 3-month time period. So you can see how the S&P 500 pushed into this area right here, this 3-month average high from the open range. It did it same thing right here. What was it, January as well, and got rejected. Came back to the midpoint here in what is this? February. And the reason why the bubbles aren't showing right now because we're coming into the new month. This is the end of the month, so everything will be showing next, I guess, Monday. Yeah, Monday the 4th or Monday the 3rd, whatever day March is. But you can see how it broke down below its 3-month average, and now it's trying to push back above as well. And you can see right here in January when the month started off, it pushed down into this low range, and then it pushed back all the way up. So it kind of gives you some idea of support and resistance, but I found it to be most effective on the 3-month average. Excuse me, 3-month average for the daily time period. And for the intraday time period, I found it to be most effective on the 10-day period. So we're going to move this back to the 10-day, and you can see how everything works on the low time frames, even though you have it on one of the higher time frames. So if I were to change this for the weekly, so week, and let's just see per kicks a 52-week average. I haven't looked at this yet. So we looked at this on a 52-week average on this 15-minute time frame. We can actually push this up to have a clear. We'll do 90 days and we'll do 4 hours, and we zoom into it. We can see with this week right here coming in, you found support here on this average daily range low into the 1 standard deviation. Almost hit the 2nd standard deviation, but it's pushing back above here. But like I said, I found it more useful on the 10-day average on the daily time frame. But you can play with the indicator. It's free. Just look in the description, and you can see that how everything works out for you. But this is the indicator. Look in the link. There'll be a link for the indicator in the description of the video if you want this indicator. And that's pretty much going to be the end of the video. If you haven't already, please like and subscribe. And I appreciate you guys taking the time to listen to what I had to say. I wish you the best, and God bless.